Ever wondered where all the lost Bitcoins end up? Today, we're diving deep into the blockchain to uncover what happens to Bitcoin that slips through the cracks and how this impacts the entire crypto landscape. First off, what does it mean for Bitcoin to be lost? When someone loses access to their Bitcoin due to forgotten keys, sending it to incorrect addresses, or hardware failures, these coins are no longer in circulation. Since Bitcoin has a capped limit of 21 million coins, every lost coin makes the remaining ones a bit rarer and potentially more valuable. Research by blockchain analysis firms suggests that between 17% to 23% of all Bitcoin might be lost. That's a staggering amount when you consider the total cap. Now let's break down how these Bitcoins get lost. One common way is through compromised private keys. Hackers, phishing scams, or simple negligence can leave an investor without access to their wallet. Then, there's the issue of sending Bitcoin to the wrong address. Unlike traditional bank transactions, there's no way to cancel or revert a Bitcoin transaction once it's confirmed on the blockchain. Hardware malfunctions or corrupted data also pose significant risks. If you've stored your Bitcoin on a device that gets damaged and you haven't backed up your private key, those coins are effectively out of reach. The loss of Bitcoins does more than just affect the individual. It influences the entire market. As these coins disappear into inaccessible wallets, Bitcoin's scarcity increases. This scarcity can drive up the value over time, especially as demand grows in a market with a finite supply. It's like digital gold. The less of it there is, the more valuable it becomes. Institutions and savvy investors understand this and often take long-term positions, banking on the appreciation driven by this deflationary nature. You might wonder if there's any hope to recover lost Bitcoin. While challenging, it's not always impossible. Data recovery services can sometimes rescue lost coins if the user still has some way to access the device where the wallet was stored. They use techniques like brute force to reconstruct access to Bitcoin wallets. Additionally, private investigation firms can track down stolen Bitcoin, particularly in cases of hacks or scams, often collaborating with law enforcement. Protecting your Bitcoin from being lost is crucial. Using cold storage options like hardware wallets can significantly reduce the risk of theft or loss. These devices keep your private keys offline, away from the reach of potential online threats. It's also wise to maintain several backups of your private keys in different secure locations. Regularly updating your knowledge on the latest security practices is just as important to ensure you're not vulnerable to new types of cyber threats. In conclusion, while the loss of Bitcoin can pose significant challenges and lead to substantial financial loss, it also underscores the importance of stringent security practices. For those holding Bitcoin, understanding how to secure and recover your digital assets is paramount. If you found today's exploration enlightening, don't forget to like, subscribe, and share your thoughts below. Stay curious and keep exploring the digital frontier.